All right, let's see if we got this right. I've got a new tool here for everybody. And let's see if this is actually working. Let's see what's going on here. All righty, so we have here. Oh, it is working. Very good. Cool. Let me just quickly check. Can you guys all hear me okay? Let me see if I can see. Ah, good. Now you can't see my screen yet, can you? I've got a new this is the new tool that we're using, by the way, that I've been I've been talking about. So it's really fancy. We're able to do all sorts of stuff here now. Let me just see if I can figure this out. Entire screen. There we go. Go. Coolio. All right. So got this thing here. Um, yeah, so now the screen is showing. I just started showing it like a second ago. Can you guys see it now? I think there's a delay, you know. There it is. All right, cool. Just takes a little while, a little patience. A couple of charts here, so we are good to go. Um, let me see. I think there's even a way to and, you guys are gonna be my little, test bunnies here. Let's see if this works. Yeah, yeah, I know. It's, again, it's, just all takes a bit of time of getting used to all this. It's not gonna be perfect. It's gonna take us a little bit of time to figure this out, but, we are getting there. All right, perfect. All right. Very good. And the, audio is still good for everybody? All working well? Just checking. And then we're gonna get started, I promise. Just check one more thing here on the other dashboard. Yes, everything's good. Excellent. Thank you. I appreciate it, guys. So I didn't mean to try this out on you, but it is good to know that it's working. Just check one more thing here. It does sound pretty good. Okay. Excellent. Okay, cool. So let's get started. I'm going to quickly make this camera thing a bit larger. You guys can see the screen. All right. So welcome. Happy Tuesday. This is our set to market morning call. We are featuring a bit of a different setup here this morning, which basically allows us to make this on Mac, which is fun, and we are going to be adding a whole bunch of stuff here, including moderators and so forth. So a bit of time, we'll figure this out. Let's see here. Let me check one more thing. Okay, so a few things this morning. We are essentially seeing a complete reversal of what we saw yesterday, which is not surprising, to be honest with you. It's kind of what we presumed could happen. I'm gonna just make this a little bit larger so you guys can see this. Let me get rid of these lines here. Not important. But this is still that sort of trading range that we have here with the S&P 500. Let me make it a bit larger. Okay. So we've been talking about this trading range, and the S&P remains in this trading range. Right? That's has not changed. However, and I made a video about this morning that you guys can see as well. I do think the odds of the trading range breaking to the downside is have dramatically increased. And the reason for that is because we now frame this been time frame given sort of duration of this, or at least what U.S. administration seems to think is the duration at this point of the operations in Iran. And I'm just going by what we're hearing. And so, I think the risk here is that some investors are thinking this could other other things could happen from that. And I mean, that's clearly what the market is saying. If you look at the S&P futures this morning, they're down 1.7% or something like that. So we've actually broken below yesterday's lows, the overnight futures. What's really interesting, and this is not something that a lot of retail investors care about, but I've been talking about these 2-year yields. If you guys recall, we talked about yields, and in fact, last week, Friday, yields broke below 3.5%. Of course, I was asked this morning or even yesterday, yields started rallying sharply. So this is really kind of counterintuitive, but it honestly it took me most of yesterday to understand why. Um, okay, audio's going in and out. I think I know why. Let me turn this thing off. There you The audio is going in and out because of music that was running. Um, anyway, what I was saying is if you look at yields, what you'll notice is that as much as we think yields are gonna go lower, so maybe that would mean I would buy something like SHY. Um, the issue that happened yesterday is that inflation expectations went up, and so that basically because of oil, right? Essentially, that's it means. And so that actually led to a rally in the short end of the yield curve. And so we had a I mean, this is a pretty huge reversal, by the way, but we continue to find support around this level. So ultimately, we do think yields are gonna go lower, but I know this is not something most of you probably care about. It's really freaking important. So, we're gonna continue monitoring these, but I don't think yields are gonna collapse here anytime soon, or not immediately because, again, the inflation or which again is largely oil spiking. And those of you guys that are in our ETF Silo Pro and certainly in our heat seeker product, you know that we have been talking about um, breaking higher for some time, and we have positioned in things like BNO and but what I it's still spotty. I turned off the music. Hmm, okay. Well, I can't change right now, unfortunately, so we're gonna have to continue this way. Maybe we have to change back tomorrow. Anyway, um, what I do wanna show you guys is this chart. So this is essentially oil futures, and, um, basically, what you're seeing is this is a long multi-year weekly chart, and you can see, the rally here, is essentially, uh, breaking not only past sort of this diagonal resistance, but it's now potentially also gonna go past horizontal resistance. So, um, that's, um that's kinda where we're at. So it's inflationary. Um, that is why we are seeing the, um, the inflation expectations going higher. And it's also actually what's weighing on the equity markets to some extent. So from my perspective, what I'm gonna spend most of my focus today is I do wanna see if the equity market can finally break this range again. That's why I'm showing you guys the futures market. So if you look at the S&P futures, that's essentially this here. This is the weekly chart. You wanna probably look at this on the daily chart, and, you can see that we are very, very close to breaking. In fact, we are arguably breaking below this range. So we'll see what today brings. Um, but I certainly am hedged. We are hedged in all the portfolios for the most part. Um, so that's kind of honestly about the only thing I can tell you here this morning. I think the most important thing is that yesterday's rally is completely faded. So if you were to look at this on like a 2-day chart, it would be like a 10-minute version. Yeah, I unfortunately heard about the audio, folks. I can't change it right now because we can't, otherwise I have to shut it all down. But, we will likely revert back to the other software that's, this too spotty, or maybe we have to upgrade this version. Anyway, but yesterday we had this big rally, and today we've given all of it back and then some. So, um, yeah, that's all I can tell you, and I think the trends are starting to change. So if you look at our, if you look at our trend following work, we're seeing more sectors starting to weaken. In fact, in our market or member session in about 10 minutes or so, we're gonna go through all of that in more detail with some of the trends changing, including in financials and other parts of the market. So, but you know what I'm gonna do here is I'm actually gonna stop this right now because it does sound like audio is spotty for most of you guys, so it doesn't look like it's gonna work. We may either have to upgrade this software or figure out why the audio is spotty. It sounds like it's not fast enough. So we'll revert back to the other tool tomorrow. So, my apologies for this. I thought we would try it. Clearly it doesn't work, but we'll give it a shot, we'll give it a shot again tomorrow, at some, and with the other tool again tomorrow. So, anyway, I'll leave it at this. I don't wanna cause any more audio problems here if you can hear me. But uh, anyway, the range looks like it's breaking. We've given up all of yesterday's rally and then some. Bond yields are going higher because of inflation expectations, which is I didn't see that coming, to be honest with you. Uh, but I think ultimately bond yields will go back lower, and then and the commodity complex. Right? I'll leave you with this chart. So this is the bond yield chart, but I'll also show you this one. Yeah. Yeah, no, the reason the audio is spotty is probably just because the plan we have for this software isn't good enough for streaming. I don't know why, how that's possible. Anyway, let me quickly show you the chart. So this is the Bloomberg Commodity Index that we've been talking about for some time. Um, and, you can see that, this I'll have to make this a longer term chart. So this here is that commodity breakout that we've been talking about. You know, ultimately, we can redraw these lines if we want to. You know, this is the nature of technical analysis, where you can adjust the lines, so which is, makes it, some people a bit arbitrary, but I think either way, you know, we have certainly broken out of these consolidation periods. So I'm watching this very closely. Again, oil has essentially been now led to this, so anyway, cool. All right, folks. Well, thanks so much. We'll see you guys, in the Market Rover, member session if you guys are in there. And, again, apologies for this audio issue here. It sounds like it's a bit spotty, but, we'll figure it out over time. Thanks so much, and we'll see you guys, back here again tomorrow in the Market Rover member session in about, 10 minutes.